On the quantum of reduction, the MPC voted with a 5:1 majority to reduce the policy repo rate by 40 basis points. 3 months moratorium we allowed on the term loans, then on working capital we allowed certain relaxations and associated measures. In view of the extension of the lockdown and continuing disruptions on account of COVID-19, the above measures are being further extended by another 3 months from 1st June till 31st August.
Well, he is the big newsmaker today for ET Now and for the Money Show. That's RBI Governor Shakti Kanta Das and a slew of announcements he made earlier this morning, which we on the Money Show are going to decode for you and understand what the impact is going to be on your wallet. Hello everyone and a very good evening. I'm Abina Kapasi and you've tuned into a brand new edition of the Money Show. Lots of announcements by the RBI governor, but we are going to skim it down to something that impacts you, your wallet, your loans, your EMI bills, your interest bills. Firstly, of course, and the most important one would also be the additional 40 basis points rate cut announced by the RBI governor. Remember that I think roughly around the 27th of March, he had announced a massive 75 basis points rate cut or a 0.75% rate cut. And 2 months later, it's another 0.4%, which means in just the last 3 months, interest rates have fallen by 1.15%. If you're a long-term borrower, if you have a long way to go on your loan repayment journey, 1.15% can definitely go a long way in bringing down your EMI bill. And I think that's exactly what the FM as well has intended to do. But it's not just that. Amid COVID-19, a lot of us have unfortunately faced job losses, cuts in our incomes, businesses as well have stalled, and hence the moratorium has as well been extended, which was first announced for the months of March, April and May, has been now extended to June, July, August. So in total, it's a 6-month moratorium option that the RBI governor is offering every borrower, corporate or retail. Well, we'll focus, of course, on the retail bit and, to talk about what exactly are the implications of each and every one of these announcements. I have with me Adhil Shetty, the CEO and co-founder of Bankbazaars.com. Adhil, it's always a pleasure having you with us. We spoke roughly about 2 months ago and we discussed this moratorium. We spoke about where clarity was needed and, perhaps why and when should an individual consider a moratorium. Fast forward 2 months later, we have yet another rate cut and one more moratorium. So to start off with, from a customer angle, from a borrower angle, what do you make of these, steps that the RBI has announced?
So from a borrower angle, Mubina, for people facing liquidity issues, and this is indeed a tough time, this is a relief that the RBI has offered for term loan borrowers. But importantly, the principles are the same that we detailed on your show when the first moratorium was offered, which is that be aware that this is a moratorium on your interest, but the interest is being calculated on your outstanding term loan principal over the entire moratorium period. So your outstanding is going up. If you can pay the EMI, do pay it. If you have to avail of the moratorium, be aware of the extra interest that's accruing. And on your last show, we spoke about a bounce back, saying, okay, you're going through a tough time right now. There are multiple, things happening in the market like job cuts. But in 12 months, save up money. And whatever EMI you didn't pay, in 12 months, pay 1.2 times of that EMI as a one-shot bullet payment, which we're calling the bounce back, which will bring your principal outstanding equivalent to what it would have been if you didn't take the moratorium. So same 3-step formula, Mubina. If you can pay, continue to pay through the moratorium. If you, for some reason, can't pay, it's okay. Make use of the moratorium for term loans, but bounce back in a 12-month period. So your outstanding principal is under control.
All right. Let's also talk about, I'm going to talk about the moratorium in detail in just a bit, but I want to, just get this bit out of the way, that 40 basis points rate cut. The first question that everybody asks is that, okay, when will my interest bill go down? Many a times we do not see that immediate reduction in the next EMI bill that we get. It still stays, as per the previous rate. So, Adhil, just help our viewers understand, when do banks essentially pass on the RBI's rate cut, to the customer, to the borrower?
Great question, Mubina. There are three types of consumers. So a consumer who's on a home loan repo rate automatically will get the benefit on their reset date.
Okay, but there are other kinds of loans as well. You have MCLR, you have fixed rate, and if you just open, let's say, an SBI website, there are a plethora of other kinds of loans. Where, if in case you are an MCLR customer, a fixed rate, it's pretty obvious, it's pretty straightforward. You're stuck with that interest rate, for the entire tenure of the loan. But let's say if you're an MCLR, customer, how frequent are the reset rates? I mean, and compare that to a repo-linked, loan regime. How frequent are the reset rates between these two loan regimes?
Mubina, we lost the guest. Mubina?
Okay, I think. You know what, unfortunately we've snapped Adil's connection, but what I'm going to do is I'm just going to, for the benefit of our viewers, reprise all the announcements that have been made by the RBI governor today, and we'll just go right back to Adil. So anyway, he's spoken about, of course, extending the moratorium on term loans until the 31st of August. I think I want to flag off also, apart from retailers, I want to flag off some interesting announcements that have also come in for business owners. There is a relaxation on working capital that has been extended by 3 months, and the interest accrued on the moratorium, if you're a working capital borrower, the interest that has accrued during this moratorium will become a funded term loan. So I'm going to get another perspective on that as well. Additionally, they've also hiked group exposure limit of banks to 30% of the capital base, so that that one group can borrow more from the same bank. They've apart from that, there are a couple of other measures as well. Reverse repo has been put down at 3.75%. Remember, we've been talking about how despite the fact that interest rates have gone down, we really haven't seen transmission maybe to banks. But yes, Adil, we were talking about when will customers see their EMI bill go down. If today the RBI has essentially cut rates, when will they see their EMI bill go down? Pardon me.
Yeah, that's a great question, Mubina. So there are three different types of consumers here. So consumers who are on a repo rate home loan, they'll automatically see the benefit come to them on their reset, which happens once a quarter. So if I happen to take a home loan on repo rate post October of last year, automatically the benefit will come to me. That's category number one. If I'm a customer who's on MCLR, I have to wait to see what happens to the bank's MCLR over the next few weeks. And depending on what change comes in the MCLR, only then the interest rate will impact my EMI. So that's category number two. And category number three are new home loan borrowers or people looking to refinance. They have to wait to see what the bank does to the new home loan rate, which we'll find out over the next few weeks. So three categories. Category number one, home loan repo rate borrower, automatic benefit on your reset date. Category number two, MCLR borrower, wait to see what happens with your bank's MCLR. Category number three, new borrower, wait to see what new home loan rates are once the rate stabilizes in the next few weeks.
Okay, all right. So that's essentially the different kind of loan regimes as well that exist. Okay. Also, now, Adil, I'm sure this is a question you get very often, and that's with respect to refinancing. If an individual is not happy with, what their bank is offering in terms of terms and conditions, in terms of interest rates, so on and so forth, would you recommend them switching over to another bank? And more importantly, at this juncture, when the RBI has also said that they are ready to maintain an accommodative stance, which means we could be looking at more interest rate cuts until the economy doesn't revive. Would you recommend then, customers and borrowers should consider moving to a repo-linked loan regime?
So we get this question a lot at Bankbazaars, Mobina. So the answer is as follows. You need to know what your savings in EMI are by switching. And if those savings are significant enough, you should consider switching your home loan. So if I was a consumer, what I do is I would wait for my bank to announce what its MCLR is. I would wait to find out what new home loan rates are, which will take a few weeks to stabilize because those two data points are critical. Then I would apply a calculation which one can check online, saying what is my EMI today once all the rate transmission has stabilized a few weeks. And if I was to refinance and switch to a new home loan, what would my EMI be at that point in time? And would the saving be significant enough that I would want to make a switch? Now, this would actually differ by borrower because what are you paying now? What will you be paying once the new home loan rates come out? And how much of your loan tenure do you have left? So this is a big financial decision. I think everyone should take control of their own finances and just do a simple calculation online of do you save EMI by switching. Now, the repo rate, right, has automatic transmission. So we discussed this in the previous question you asked. So once you're on a repo rate home loan, when the repo rate changes, automatically the transmission happens to you, and it is apple to apple. Now with the MCLR, right, you'll need to wait to see what the change in MCLR is, and that depends upon the marginal cost of funds. So it is not exactly 1:1, but there is an MCLR transmission. So everyone should take control of their own finances and just do a simple calculation to decide what's right for you.
So that calculation is absolutely necessary. If you think it's too complex, you can always just go to your bank's relationship manager, and they will be more than happy to explain to you what exactly would you be paying in both regimes, what would you benefit, or perhaps if you are better off in the regime that you are currently at. All of this can be explained to you by your relationship manager. Of course, hidden charges as well, Adil. I mean, are you seeing instances of perhaps hidden charges, prepayment charges, rollover charges? Is that sort of is that something that banks have been indulging in now?
Not really, Mobina. I think the banks and the RBI have done some work in terms of minimizing these hidden charges. So typically, right, floating rate loan doesn't have a pre-closure fee. So if you're on a floating rate home loan, there is no pre-closure fee. You need to check your contract depending on when you signed up for it. But typically, in the recent past, right, there's no hidden charge at all. You need to validate, and it is explicitly available. So there's nothing hidden about it. You need to validate, is there a processing fee for you to refinance and take a new home loan? And like I said, two things you need to do is one, let the new home loan rate stabilize. Because one very interesting thing, and I think the viewers should understand this, it does not mean because the repo rate fell 40 bits that new home loan rates will automatically fall 40 bits. That's not how it works. Let's wait to see what happens to the new home loan rates because the margin on the repo rate could change for the new home loan. So wait for that to stabilize and be aware, is there a processing fee on the new home loan? Now, there are cases in which the new bank or your existing bank might waive the processing fee if it's a refinance. But really, I think the devil is in the detail. It's a simple calculation. Like you said, talk to your relationship manager, or there's so many tools available online nowadays. Just take control of your finances and check online and then take your decision.
Yeah, that there are way too many tools available online. Bankbazaar itself has a plethora of instruments that you can actually check out, and that too would help you out in making your decision. Okay, now of course coming to the very contentious moratorium issue. Now initially when the moratorium was announced, everybody thought that, okay, you know what, it's maybe, you know, March, April, May, or April, May, June, and then maybe in June I can pay up the interest of the 3 months that I have not paid and carry on, you know, with my life and with my EMI payments as is. But I suppose it's not as simple as that. However, Adhil, I think in your first answer itself, you've broadly explained to our viewers why this moratorium could turn out to be pretty expensive, and, you know, as far as possible, just try and, you know, not opt for the moratorium. But I just want to understand, are banks today even accepting the option that I gave, that, you know what, if let's say after the end of the moratorium period, be it in June or be it in August, if I say, look, I've come into money, I want to just pay off the moratorium period EMIs right now in bulk and not have it essentially accrue as my interest and, you know, balloon as a big bill at the end of my EMI or at the end of my tenure, are banks really offering that option as well?
Yes, you should actually do that, and that's what we're recommending to customers at Bankbazaar, saying that if you can pay, but if you do make use of the moratorium, like you rightly pointed out, Mubina, your interest is accumulating over that, you know, 3, 4, 5, 6 EMIs that you use the moratorium for. So when you come upon money, right, when things get better, definitely make a bullet payment, talk to your relationship manager, and make a bullet payment such that you are as if you didn't make use of the moratorium and your principal is reduced. So one easy formula which we're calling a bounce back, right, at Bankbazaar is the following. Whatever EMI you make use of for moratorium, in 12 months of making use of the moratorium, in 12 months, right, pay 1.2 times of that amount which you took as a moratorium as a single bullet payment, and that will normalize your outstanding principal, and you will be on an as-if situation. So this is an opportunity where if you have to make use of the moratorium and you're going through a tough time, it's okay. The RBI has extended this facility to you, but definitely save up money in the next 12 months. And within 12 months of making use of the moratorium, make a single bullet payment of 1.2 times of the rupee value that you availed of as a moratorium, in order to normalize your principal outstanding and make yourself as is. That means you won't have to pay extra tenor. We will normalize your tenor by making that 1.2 times EMI payment, which we're calling the bounce back.
So a very simple strategy. Let's say if you absolutely are in need of urgent cash and, you know, you do not have any more cash to spend, and you want to avail this moratorium facility, what Bankbazaar is recommending, take the, you know, moratorium, whether it's till, you know, May and June or whether it is till August. But within 1 year of you availing this moratorium, you know, save up or however you can, but make 1.2x of the rupee value of the moratorium that you have availed. So let's say if it's a 4-month moratorium, then the 4 EMIs that you have missed, make a 1.2x payment of that within 12 months. That will essentially at least help you regularize your entire EMI schedule. It will not put too much of a strain on your overall finances. And you know, in fact, we as well, we've got some very interesting calculation that shows what will be the eventual cost of the moratorium that, you know, you will have to pay if you do avail it. And Adhil, that's as well something I think that everyone must consider, that what are the points they should keep in their mind before they should avail the moratorium. Simple power of compounding, simple mathematics, Adhil, but this is something that we spoke about earlier as well. I want you to reiterate it for our viewers too. How important is it that you consider how many EMIs you have left to be paid before you consider moratorium?
Yeah, so, you know, you have shown detailed calculations, but let me just give this in a simple way, Mubina. If you're towards the earlier tenure of your loan and you make use of this 5-month moratorium, you could end up in an extended EMI scenario paying 20 to 30 additional EMIs if you make use of it in your first year of the loan. However, if you are in your 19th year of your loan, you could end up paying just 5 more EMIs for the 5 EMIs you maintain the moratorium for. So the impact is progressively more the earlier you are in the tenor of your loan. So that is why, right, we are stressing again and again, your interest is being calculated. If you can pay the EMI, do pay it. If you can't pay it and you make use of it, please bounce back in 12 months. There is a compounding cost to making use of the moratorium, which you have pointed out.
Okay. Adil, there was an announcement by the RBI governor. This was new. This was not something that he had mentioned in the previous announcement, but he mentioned that the accumulated interest for the moratorium period can be converted into a term loan and doesn't have to be repaid immediately after the moratorium ends. So what are we looking at over here? I mean, how will this essentially work? Are we looking at a term loan that will have to be side by side paid, and hence there'll be no need for, you know, compounding of the interest on that missed moratorium for the entire remaining tenure of the loan? Does that what it mean?
See, you ask a very good question. My read on it, and if you look at the fine print, is this pertains to working capital loans for business. So this does not pertain to retail home loans. So where you can convert the principal accumulated over the moratorium and pay it off as a term loan by March 31st, 2021 is not pertaining, in my interpretation, to retail loans. Mubina, this pertains to working capital loans of businesses.
Right? A lot of our viewers are also small business owners who may have taken working capital loans. Is this something that, you know, would benefit them a bit more, as opposed to, you know, what was the earlier regime, that they can just take that that chunk of money that they had available moratorium fund, convert it into a term loan? Would they be in a better position as opposed to what they would be if they would take the moratorium and, you know, have a long tenure to pay off?
You raise a good point, and I'm in agreement with what you said. I think this makes it a little bit easier for small businesses making use of the moratorium, saying rather than at the end of the moratorium having to make one payment with all the EMIs that you took moratorium for, now you're able to do it as a term loan over several months. So yes, I do believe that this will be beneficial, and the RBI has done this to help small businesses, which has been the focus of the government, to try and help MSMEs during this time.
But I think the key question to also ask here, Adil, is, let's say now today I want a home loan, or I want a loan to start a business, even riskier, right? But let's say I want a loan. Can I walk into the bank? Will I be able to get the loan of my choice? Even if I think I'll focus more if I'm a small business owner, because that's, I think, the more riskier loan, right? If you could call it that from the bank's angle. Will I be able to tomorrow walk into a bank and, you know, ask them that, listen, I'm starting a business, pardon me, and I want a loan, so please give me a loan. And that too, I want it at that attractive interest rate, which of course now it should technically be available for, right? Because the repo rates have been slashed so dramatically. We know banks have been very risk averse. They rather park their money with the RBI at that 3.8%, or now it's, in fact, it's even lower. It's 3.25%. They rather park the money over there than give it out, you know, to borrowers. So what is the feasibility of me actually being able to get a loan now from the bank?
So, Mubina, good question. And the answer is this really depends on a case-by-case basis. So I think there are 3 points to consider. So one is, you know, the banks are functional right now, especially in the green zones and the orange zones. Operations are starting to return to normal. I think the banks have worked very hard, even in the red zones, to keep their branches open. And really, we have to appreciate the fact that they've kept functioning and their staff has kept functioning through a tough situation. The government is making a big push to try and open up MSME loan flow. So we've seen a number of things, both on the policy side, wherein there is that push to a 3 lakh crore automatic MSME loan. There's, you know, various liquidity windows which have been open for NBFCs that, you know, you and I are aware of. Processes also have been made easier. Today, there's a video KYC which the RBI allowed starting January 2020, where You don't have to meet the bank. You can actually do the entire KYC process via video. Now, that being said, right, I think these are extraordinary times, and every bank will obviously evaluate on a case-by-case basis if it can do a particular new loan application. So I think this has to be handled on a case-by-case basis. My advice to entrepreneurs out there is, by all means, do approach your bank, make your case as an MSME, do apply. And I'm sure if you have a good credit score, if you have a good credit history, if you have a viable business model, right, the government is doing its very best to restart credit flow to MSME. So the MSME minister has specifically said that that is the focus of the entire 20 lakh crore plan, to get credit flowing so MSME can create jobs. So I think there are definitely some positives, but these are tough times and you should apply, and let's see how this works out over the next quarter.
All right. Well, some very valuable recommendations from Adhil. Firstly, don't opt for the moratorium. But if you absolutely have to, then try within the next 12 months to make one bullet payment of 1.2x of the value of the moratorium. That's the EMI multiplied by the number of months for which you deferred your EMI payment, 1.2x of that. And that's the bullet payment he recommends you should make within 12 months of availing the moratorium. It'll help you normalize your EMI schedule. Adhil, as always, a pleasure having you with us. Thank you so much for joining us today on this episode of The Money Show, clarifying a lot of those nitty-gritties as well of the RBI's governor's announcements. Well, with that, we'll wrap it up on The Money Show. Many thanks for watching. Stay tuned, of course, to ET Now.